Hello and welcome to another edition of our Facebook Live chat. I'm Samantha Brown, the marketing coordinator here at Stadler and Company, and this is Jordan Moran, enrolled agent. Tell them about yourself.
Hello, everyone. Yep, Jordan Moran, enrolled agent. I've been in EA since 2012. Tax resolution expert. Had to nail that one home.
So today we're going to continue our conversation about payroll taxes and some issues that small businesses can get into. Barbie just joined. Thanks for joining us, Barbie. So if you didn't get to see the video last week, make sure that you go to our Facebook page and you can watch that so that you can get caught up on what we're talking about. Holly just joined us. Thanks for joining us. If you guys want to share the video, then your Facebook friends can see the live feed as well. And also, if you want to ask questions, you can do that in the comment there, or you can email them directly to Jordan if it's more of a private question.
Put my email in the comments there.
Yes, and I will try very hard not to accidentally end the Facebook feed this time, like I did last time. So,
I think Jared actually liked it as well.
Yes, thank you, Jared, for tuning in. Okay, the finish button, just so if you've never done Facebook Live, the finish button is seriously right where you would hit OK or whatever to send a text. So, not my fault. Looks like Cody has a question about business expenses as it relates to food. He wants to know if he's eating at B-Dubs, if he can write that off.
No, that's Cody. That's a no. That's personal in nature. You're at work, personal job there, eating lunch, so you are not able to write that off.
Be different probably if it was a business meeting, correct?
Exactly.
But since you know what business Cody is, then you know that it does not apply.
And that's also, if it's business, it can be subject to a 50% limitation. So it's limited anyway there, but good question.
So getting into the topics for today, if you have any more questions, feel free to throw them in the comments there or email Jordan. So we talked a little bit about payroll taxes and what it means to be a independent contractor versus an employee, but that is a whole different issue that we thought we could expand on a little bit more. So can you explain the difference between those two designations?
Yeah, I think one of the most common errors, especially in a business for the employer, mainly because it saves them money and it really doesn't save the contractor or employee money, is treating an employee as an independent contractor, meaning you're paying them by check, you're not withholding any taxes for federal, no Social Security, no Medicare, and the contractor's paying that at the end of the year. It's a huge issue with a lot of businesses, and it relates to payroll taxes because if you're audited, the IRS can turn all those contractor wages into employee wages if they feel like that the qualifications aren't met to be an independent contractor. So without going into it too deep, the forms you're required to keep are different. For an independent contractor, you must have a W-9 on file and a certificate of insurance for the contractor there because they are outside of your business. They are not using your tools. They are not using your facilities. They are not using your desk. They're bringing their own things in, working on their own time, not working on your schedule. If you pay a contractor an hourly rate, you're basically done right then and there in an audit. So as I said, the forms are different as far as requirements. You need a W-4 on file for an employee. You won't need a certificate of insurance there because you're paying that on behalf of the employee because they're working at your business, using your facilities, using your supplies. As I said, record keeping is very, very important, and it can lead to payroll tax issues there if you are not doing something correct. I've seen situations where companies were audited and they paid their people as contractors and had good records there and won in an audit. So it can happen there, but you definitely want to seek advice from a payroll tax specialist when you're doing that, and you want to do that from the beginning so you start out correct and not messing up there from the beginning.
So when you are ready to start your business, this is the best time to
Right.
decide how you're going to pay
You
your
want to make
people.
sure you know the law because it's on you. It's on the employer. That is on your shoulders in the event of an audit.
I mean, we said before, you can't just say I didn't know better.
Right. That is no excuse.
Right.
Especially with payroll taxes.
Looks like Jeff and Joran joined us. Thank you. And
Cool.
Darlinda joined. Thanks for joining us. Feel free to share the video feed if you want to, and let your friends know you're on. Barbie has a question. What about taking gas cost for your job off your taxes?
Well, it's similar to Cody's question there, Barbie. If you're driving to work, to a personal job, and you're just commuting, you're not able to write off your gas there. I'll give you a situation where you can write off actual expenses such as gas, insurance, licenses on your vehicle, or mileage. Typically, that deals with union workers where they're working on multiple job sites, and those job sites are temporary, meaning they're less than 1 year. So you're sent here for a temporary assignment, and you're instructed by your employer to go there. So that's a situation where you may be able to write off gas. In most cases, mileage works out better, but someone like Samantha or I who are just driving to work and commuting, that's the key word, you're not able to write off your gas expense because it's personal in nature.
So if you're self-employed, that's a little different
Self-employed,
too,
yes,
correct?
yes, right, exactly. Hope that answered the question.
Okay, so so we got through the independent contractor versus employee. If there's any questions or if you need anything, if you need to go into any of that in detail, definitely let us know. Because like Jordan said, that's a whole nother topic.
Right. I don't want to go too deep in that. We can talk about that for forever. So to give you the basics there.
So last week, we also talked about some things that can happen if you run into payroll issues, some of the penalties, and some of the ways that the IRS can react. And one of those was you can face an audit.
Mm-hmm.
So I know you've dealt with a lot of things like that, and you have some tips and tricks for dealing with the IRS and specifically for dealing with audits. Can you share some of our secrets?
Tip number one, if you're in a situation where you're facing IRS penalties, it doesn't mean you're going to owe those. As I said last week, if you're dealing with payroll taxes and you have penalty and interest, there's not very many ways to get out of those because they're treated so much differently because they're a trust fund. You're paying into Social Security and Medicare for someone else. And you're not paying into that, you're essentially stealing money from the government. So there are ways to get out of it, as I said. A couple key words that you want to maybe jot down or know about are reasonable cause and unforeseen circumstances. So reasonable cause would be, I did not file my taxes on time, did not file an extension, and I obviously did not pay them if I owed because I had some medical issues. I was laid up in the hospital, I was in a coma, a family member in my, one of my family members was very, very sick. You could send in documentation like medical records showing that you were at the hospital or dealing with medical bills or a medical situation, and the IRS may waive penalties for not filing, for not paying under those situations. An example of an unforeseen circumstance would be, okay, I had a fire, I have a total loss. I've had a business for 15 years. I have 0 records now because they were burnt in a fire. That's another situation there. And there's some ways to get through that without records. You're not totally going to be in trouble at that point because there's something called the Cohen rule there, and you can use averages for your industry to come up with records and reconstruct. So without going into that too deep, just know about that. Tip number 2, you don't have to talk to the IRS auditor, meaning you. I'm being audited. I'm a typical taxpayer. I do not have to talk to the auditor myself. One thing I want you to know is that is the absolute worst thing you can do. If you go to the IRS audit yourself, it's not going to work out well for you. The IRS may intimidate you. They know you don't know the law. They're going to do things that they wouldn't do if I was sitting across the desk from them because I have the knowledge to counter what they say. Want to let you know the taxpayer does have what we call a taxpayer bill of rights. So we know those as enrolled agents and as CPAs. You're not going to know that yourself there, so we know what to say, what you can't say, what you don't want to give them, because you don't have to give them everything. You only want to give them what they're asking for. Obvious one here is the knowledge factor. We have the knowledge, the training, the skills. I've been to the seminars there and the experience there to deal with that appropriately. And as I said, I already mentioned IRS intimidation. So if you want me to go through these tips each one by one, if anyone has any questions about anything, feel free to comment. Tip 3 is you can beat the odds when facing an IRS audit. In most cases, meaning about 80%, the IRS does win at an audit, okay? And you can look at that in different ways. You can say, hey, why do I need your help if they're going to win 80% of the time? Well, I'll give you an example. The IRS wins to them when they collect money. So if you go to an audit and they're saying you owe $100,000, we go to the audit, represent you, and you end up paying them $20,000, I would say you won in that case.
But the IRS still feels like they won.
Still feels like money because they collected, right? And there's different situations where that can happen. One thing you want to know with the IRS is you are guilty until proven innocent. So going into an audit, you're guilty until you prove otherwise. The IRS can file returns for you on your behalf. If they see that you owe money, they will file what we call an SFR, a substitute for return. And they'll file it single, no deductions. You don't get anything. So in most cases, if you file an actual return, you're going to come out better there. Legal representation, meaning us, vastly improves a successful resolution for you. Basically, with what I just said, if you're subject to penalties, and we know there's ways to get out of that. You had an unforeseen circumstance, or you had a reasonable cause. You're able to get out of that because of us. And one way to relate this to an attorney is, would you go to court without a lawyer? So it's not smart to go to an IRS audit by yourself, not knowing the law, not knowing what you need, not being prepared, and not knowing your rights. So you definitely want to consider having representation when you do that.
Real quick, it
yeah,
looks
sure.
like Brandon shared our video. Thank you very much.
Cool.
And CB just joined us. He's another one of our preparers here. Mm-hmm. So thank you for joining us.
Okay. When I go to an audit, tip number 4 here, I try to get it resolved as quickly as possible. So what I'll do is I'll gather my information that I know I'm going to need based on what the IRS is asking for. They'll send you an IDR, an information document request. If you go to the audit with all that information, you're going to come out a lot better than you were if you didn't go prepared. We sometimes will conduct a trial audit, so we'll sit down with the taxpayer, letting them know what's going to happen at the audit, what type of things are going to be needed from them. As I said, they are not going with us. This is us going. But even doing that trial audit beforehand is going to help us out a lot. It's going to save you a lot of time and a lot of headache.
That way you can discover if there's any surprises,
right? Exactly.
Or anything that's going to come up whenever you sit down with the IRS.
Yeah. Be prepared, not scared, as you would say, Samantha. And the other thing I want to mention about this is, if you're ever in an audit and you think you can't afford representation and you are just absolutely wanting to do it on your own, do not let them meet you at your place of business. That is not smart. They will be looking at everything, looking through your records, seeing how messy your office is, see how your business operates. Plus, you got employees talking, so you just don't want to do that. You want to meet them at off-site, so they can't see what's going on, and that is your right. That is part of the taxpayer bill of rights. You can meet them wherever you want. You have that option. You have that right. The last tip I want to give you is the IRS does cut deals. There are very rigid requirements in doing this, and what I'm speaking of is what we call an offer in compromise. You need to owe probably at least $20,000 to get a deal cut with them. You can have minimal assets. Your monthly expenses need to be paid with your monthly income, and you need to have very, very little left over there. And show the IRS that, hey, I'm paying my necessary expenses with my income. I do not have any extra money to pay you. And that deals with the state as well. And the IRS can waive and does have the ability to waive all penalty and interest. So as I said before in the beginning there, you do not, just because you're subject to penalties doesn't mean you have to pay them, doesn't mean that you owe them. That's why you need an expert in the result of an audit, or if it's just correspondence, a letter there. I never tell anyone to pay an amount due letter until I look at it, until I know that it's fair.
And like you mentioned before, in a previous Facebook Live,
Mhm.
it's also, you can not only cut deals with the total amount due, but you can work with the payment plan and
Right.
work with those things so that the amount that you have to pay each month is different.
Right. Exactly. Yep. True. I think Holly had a question.
Holly has a question. How long does it take to get out of tax trouble?
Well, it definitely depends on the situation. If it's something where someone owes $5,000, I'm going to advise them, if they cannot pay in full, just to do a streamlined installment agreement. The IRS will set the agreement up over 72 months, and as long as you make your payments on time, everything should be good. If you owe $100,000 and you're dealing with payroll taxes, as we talked about last week and today, it could take 5 to 6 months to get a case resolved. So it all depends, a lot of different factors. Are we getting the information we need? Are we getting it on time? Is the revenue officer cooperative? Is the IRS cooperating? Lots of different factors.
Good question.
So it could be 1 month, could be 6 months.
And when someone comes in for a consultation, you can kind of give them an idea
Mhm.
of how long it might take.
Yeah, we do that discovery there. We try and figure out what's going on first, and that's usually pulling IRS transcripts, seeing how much they owe, seeing what's not filed, seeing where they're at in the process with the letter from the IRS. If they're at the lien level there, we know it's going to take a little bit more time. But if they're at the beginning there, where they're just getting a proposed amount due, we may be able to close that out a lot quicker.
So it makes sense to act quickly when you get
Right,
those
as I
letters,
said,
like we said before.
Yep.
Okay, it looks like we are a little over our time here. We'll give you another minute if there's any other questions or follow-up comments, anything that we've talked about today. Is there anything else that you wanted to add?
No, I think we're good.
And
Appreciate everyone getting on and commenting, liking, sharing. Does help us out a lot there. So thanks.
absolutely. And we have some more tips that we're going to share next week.
Mm-hmm.
So make sure you tune in, same time, same place here, Facebook Live at noon. And again,